Socially responsible investing. Should you care? Why does this even matter? Watch this video to find out more. Hello, welcome back to another video with Mind Money Masters. I'm Cameron and I'll be your host today as we delve into a little bit of the world of socially responsible investing. Thank you for watching. Please remember to subscribe to my channel and turn on notifications and see if there's any new videos that are created. Also, if you feel comfortable, please add a comment in the feed on what you liked and what I could talk more about in the world of personal finance, investing, and making money online. It really helps me to hear what you are interested in. Also, as a point of disclosure, all of my opinions are solely mine and not any form of professional financial advice, as I am not a licensed advisor. Please work with your professional advisor before making any decisions. You know, I really like this quote about socially responsible investing. The whole idea of socially responsible investing is skyrocketing. When you're putting a lot of money into something, you want to get a good financial return, but you also want your money to do good things. Is this true? Do you believe this? So today we're going to talk about what is socially responsible investing, the difference between this and ESG investing, or environmental, social, and governance investing, plus how you can be a socially responsible investor. Socially responsible investing, or SRI as I'm going to call it, is an investing strategy where you seek to get return in companies that follow certain ethical or environmental guidelines while operating their business. So many times people will invest in companies that run contrary to their core beliefs. SRI seeks to find companies whose operations are congruent to the investor's ethics. So when it comes to environmental, social, and governance investing, or ESG, you're seeking companies who are making an active investment of time or money to improve society in certain ways. For the environment, the company seeks to create a product or service that will improve the environment. For social, they seek to improve society through their products. And in governance, the overall leadership of the company is focused on diversity. They don't excessively pay executives, and they focus more on being responsible to the shareholders. Now, many people and many investors believe that SRI investing and ESG investing are the same. However, there are some subtle differences between the two. Here's a look at SRI investing and ESG investing, how they compare and contrast with each other. So the SRI model seeks to exclude companies that do not meet certain standards such as unethical business practices, excessive pay, or unfair working conditions. ESG investing, however, looks for companies that are actively following a specific set of guidelines. SRI is more of a passive approach, while ESG is more of an active approach. So what I mean by that, passive or active, is that with ESG investing, those companies have established guidelines within their corporate structure. The SRI model may have companies that don't necessarily violate any social issues or policies, but they don't have specific guidelines necessarily set in place within their corporate structure. Does that make sense? If you are looking to get started with socially responsible investing, then you'll be glad to know that there are a number of options available. So here's a look at 5 specific funds as a way to get started in SRI, socially responsible investing. Please note, again, this is not a recommendation to buy any of these funds. These are simply used for example purposes. Please reach out to your licensed advisor before making any investment decisions. So the first one, the Vanguard FTSE Social Index Fund, or the VFTNX as the ticker symbol indicates. And you can actually find out more about the ticker symbols if you haven't read my mutual fund, or if you haven't seen my mutual fund YouTube video or read my mutual fund blog introduction. This fund tracks the performance of the FTSE for good US Select Index. That index includes a number of large cap and mid cap companies who focus on environment, social, and corporate governance. So it's the FTSE for Good is the index that it will use as a benchmark. The great thing about investing in this particular fund, notoriously with Vanguard, is that they charge low expense ratios. So with the Vanguard FTSE Social Index Fund Admiral shares, you will only pay 0.12% as an expense ratio. The next one, iShares MSCI Global Impact ETF, ticker symbol is SDG. If you're looking for global exposure to socially responsible companies, then you really want to take a look at this iShares fund. This exchange-traded fund includes companies that are dedicated specifically to reaching the United Nations Sustainable Developmental Goals. This expense ratio is a little bit higher, 0.49%, than a mutual fund, but one of the advantages, as I've mentioned in several other videos with ETFs, is that you can trade this intraday versus a mutual fund. You can only trade once a day. So you can potentially use protection on the ETF versus mutual funds are very difficult to protect yourself. Next one I want to look at is the iShares ESG Aware MSCI USA ETF. This ticker symbol is ESGU. If you are looking for top US companies that practice specific ESG guidelines, then you'll want to consider the iShares ESG Aware Fund. This ETF does not include companies that produce civilian firearms, tobacco, or controversial weapons. The expense ratio is pretty reasonable too at 0.15%. Next one, iShares Global Clean Energy ETF. So this is ICLN. There's a big movement recently when it comes to clean energy. This approach is not only ethical, it can be lucrative for investors. This iShares Global Fund gives you exposure to some of the most innovative clean energy companies. Currently holds about 30 clean energy companies and exclude any involvement with thermal coal or oil sands. As it is a very aggressive ETF, the expense ratio is higher, 0.46%, so similar to the iShares SDG. But again, ETF you can trade intraday. There is the Humankind US Stock ETF, HMKD. This gives you a lot of exposure to different companies that are making the world a better place. You ultimately want to look at this fund from the standpoint, in particular, it gives you the exposure to 100 US-based companies that practice this ESG governance policy. Top sectors in this ETF include healthcare, technology, electronic technology, technology services, and healthcare services. So, how do we become a socially responsible investor? So there's 3 quick ways that I can talk about for you. Read the company prospectus, for one. That's that little document that gets sent to you whenever you purchase a fund that nobody reads. Right, read that. So a prospectus basically is a sales brochure that tells you everything about the company from an investment point of view. Also, kind of, inherent is visit the company website. Check out the company itself. Learn more about the company that you're investing in. You can find information about the company's business practices, investor relations, all on their corporate website. Check the news feed. I know some of us try to avoid news at this point in time, but at the same time, you got to check the news feed associated with the company that you're investing in. Look up news and see if there's any negative stories about the company's executive pay, worker pay, environmental impacts. These are all important factors to take into account when you're looking at the news feed. It is always up to the investor yourself to investigate this company. If you don't have time to do the research of a particular company, then consider definitely looking into the ETF or a mutual fund. They've already done the research for you. So with socially responsible investing, you can make money and feel good about it. But be sure to check the prospectus of any fund before you invest, and with the right SRI portfolio, you may be able to reach your financial goals with a clear conscience and investing in some really awesome organizations and some great ETFs. Make sure to check out the post on, investing risks. I brought that up. It's in my blog, and I can put a link to my blog site. And make sure you gain as much financial education and experience before making any serious financial decisions. All about doing the research. Understand your risks. Understand what you're going through before you make any investments. Thank you so much for watching. Please remember that even though I talk a lot about investing, this is only one part of the financial pie. It's one of the pieces that I am the most passionate about, but we all want to be better investors, right? I mean, that just makes sense considering that we want to protect our capital and care about the environment and this world and grow as an investor and as a person, leaving a legacy, leaving wealth for our families and whomever you might be wanting to leave wealth for. The best way to protect your capital is to diversify across asset classes. And I don't mean moving over to bonds. I mean commodities, real estate, and personal business, creating your own business. If you have an interest in starting your own business where you can earn passive income through digital assets to be able to fund your investment portfolio or any other endeavors that you would like to partake on, remember, the rich and the wealthy have 7 streams of income. Please click on the link in the description page and it will take you to a short video talking about the future of assets and how they are becoming widely digital and how you can take part of this new economy. Thank you so much again for watching. Remember to subscribe to my channel, please, and comment below with any questions or thoughts that you may have had. Cheers to your success and happy investing.